Good evening, ladies and gentlemen. Today is the 19th of March, and very interesting day once again in the market. This is like every single day, it's never a normal sideways sort of day anymore. We had a 450 point range today from the low to the high, and stocks like Reliance moving 100 points from the day's low is quite something. That being said, we had quite a difficulty managing our position. When we entered, we entered really early and got caught off by the puts, and then as we were managing the puts, we then started getting caught off by the calls. There was a point for the longest time where the puts weren't going down in price, but the calls were spiking in price, so there was an increase in IV in the weekly options, especially on the call side, as the data was suggesting a very bearish outlook, but the actual move itself was extremely bullish. A lot of those shorts that got created had to be covered as well. That being said, all said and done for the day, I managed to be about 2% down. This is a bad day, but absolutely nothing to mourn. These kind of days are absolutely normal in the market, and you cannot hide from them. Had I not been caught off earlier in the day, would have probably ended up doing quite all right. And in fact, if I had respected the trend and really risked off on the call side as well, that would have worked out quite well as well. But that being said, you can't set up your system to account for days with such a large range, something like a 450 point range. So this is all part of it. You can't hide in the market, and losses do happen, but I hope you have some takeaways from this video. That being said, have a great weekend, and I'll see you next on Monday. Good morning, ladies and gentlemen. So today is Friday, and we have gap down. Opening is much worse, almost 120 points worse than what we expected. We entered too early. Looks like we should have waited for some time to wait for prices to stabilize. And these puts have really expanded. So we kept moving down our call to manage to the extent possible. But despite moving down our call, we've noticed that there isn't much decrease in call premiums and quite a substantial increase on the put side premiums. That being said, today is a Friday, which means a lot of positions that, yes, so there is an increase in IV in the options, but a lot of that should cool off towards the end of the day. So we're basically now in what we can consider a confirmed correction. We could head all the way down to 14,000 potentially, but the next visible support should be around 14,200. So 14,200 more or less definitely on the cards. In this kind of situation, with the premiums being as good as they are, there is potentially also an opportunity to carry positions in case we see that the premiums remain high towards the end of the day, but that is a call that we will take later on. Currently, this is our intraday position. In terms of what is happening positionally, our bank Nifty position is losing quite a bit now because the future is losing a lot and the call only covers still 35,000. So what we've done is we have added 33,500 call as well as doubled our quantity of the 35,000 call. What this will do is it will make our trade look like this, wherein we continue to benefit if we don't slide too much further, and if we slide further also we benefit. So we've just sold some additional calls to smoothen out this particular expiry, and we're still getting some pretty good prices. On Reliance, what happens now is we are at our break-even point on Reliance. So we're not going to do anything in the next month, but for this month we will sell additional 2,100 calls. This position expires next month, so we're not going to be too quick to do any kind of correction to this. In case we continue to remain here or head down further, then we will move down our calls slightly and potentially consider once again rolling forward our puts by another month. But that is a decision that we will take if we continue to slide. So around 1950 is when we would think of taking such an action. Okay, so now we're seeing a sort of pullback from the lows, and the idea is it should get sold into. So we will only roll our calls back up if we take out this candle, we take out the day's high. So we take out the day's high. Currently half our calls are here at 14,700 and half at 14,750. So what we'll do is if we take out the day's high, we will move this up. If we head to the day's low, then we will move these down. That's the plan. We are currently sitting on a 700 points triangle. A 700 point strangle has 160 points plus, and the 750 strangle has 150 points. So that's very good pricing, and yeah, makes it very attractive. It's just like Monday, Tuesday, Wednesday. So these are more or less weekly contracts at this point of time. So the premium available is very, very high, and yeah, we'll continue to hold this spread. The spread is really good for now. We're not seeing some kind of big cascade yet. We'll have to see once again and reassess if we take out the day's low, what kind of downside is possible. So Bank Nifty holding around 33,500, and Reliance also just 1990, below 2000 now. Okay, the time is 10 o'clock. We're testing the day's highs again. We've moved away our calls, we moved them higher. And the idea now will be, if we test the day's low again, then we will get out of the put side. And if we continue to move up higher from here, at least till 14,500 is convincingly taken out, our calls will remain where they are. If we convincingly hold above 14,500, then we'll move our calls up by another strike, first with half the quantity and then with the rest of the quantity. Okay, 10 o'clock update is we saw an up move where we tested 14,500. So we moved about 2/5 our quantity to 14,850 on the call side, and yeah, our puts continue to be at 14,000. Puts are almost 475 points away, and calls about 320 or so over here, and these about 370. So for now, I think we're comfortable holding this. The idea will remain once again now. If we test on the downside 14,450, then once again we'll book these calls at 14,850, move them back to 14,800. And in case that doesn't happen and we continue to head above, and this time head above 14,500 and then hold there, then we will move up the rest of these calls here. So that's the plan. So we're taking a look at the open interest, and there are a lot of short straddle positions being built up around 14,500, and currently that straddle has about 390 points in it. So if you say 400, that's giving you all the way till 14,100 on the downside and 14,900 on the upside. So that being the case, should be kind of interesting to see if it looks attractive to take home towards the end of the day, because right now we're thinking 14,000 should not be breached, and 15,000 also being highest open interest should be the upper range of the expiry. Taking home something like an iron condor of 14,000 to 15,000 overnight will feel quite attractive. We'll have to see. You might also take a short straddle itself or a mix of the two. So we'll have to look at the pricing towards the end and arrive at that. We're exactly back at 14,500 now. Okay, so we've had to move up our calls again to 14,850, and yeah, the day is going to be kind of all over the place. What we're going to do now is, until we breach 1550 and higher, we're going to keep the calls a little bit more expensive. We breach 1550 and head higher from there, we will move away half the quantity to 14,900, and if we start touching 14,600, then the rest of it will also move. For now, we will continue to hold this position as it is. Okay, we're partly getting played by the market now, and what we have done to deal with that is that we have just widened the range of our strangle immensely. We have made it 1,000 point strangle and one with a little more than 90 points, and yeah, if the premiums continue to remain this attractive, we will probably hold this position. We're not expecting too much upside either, but that being said, we continue to trend up, and yeah, that's not particularly crashing the puts, but it's definitely inflating the calls. The call side IV is going through the roof. So we're just going to hold this position until we breach 14,700 on the upside, in which case we will get out of the call side completely and just keep a bull put spread, and that's the plan. So we breach 14,700, and we continue to go from there, we will just get out of the call side. And yeah, call side massive IV expansion at this point of time. Okay, some major call side IV spikes. So when we go up, the calls are going up and puts are not really coming down, and we come down, the puts are expanding, calls are not coming down. So this is generally the worst situation to try and do any kind of adjustment. We're not going to do any adjustments. The plan for now will be hold this position overnight if required, but not try to get a bad deal by changing strikes when the pricing is just really unfavorable. So that being said, what is happening now? We're seeing a lot of put writing at lower levels and put unwinding at high levels. So the up move is being used to unwind some of the in the money puts. People are getting out. At the same time, we have massive call writing that took place at the money and in the money. So positions being built up around there. So I wouldn't really get on this. Okay, this is the immediate reversal yet, and I still think the current range of 14,000 to 15,000 is very, very good, and getting almost like 96, 97 points for it. So we'll continue to hold and see if any kind of changes need to be made, but to the extent possible, will not be making any changes to this position, because massive IV expansion just means that we're getting a bad deal on it. So we'll hold this for now as is. Okay, so very interesting sort of day, tricky day. I mean, our position is very, very far away. It is 570 points away from the put side and 320 points away from 420 points away, sorry, from the call side. We have 1,000-point range, but meanwhile, we see what's happening. So we gapped up, gapped down lower than what we expected. We cascaded down, tested 14,400. We went to 14,350. A lot of people went short there for sure, got trapped on reversal, stop losses hit. We made an up move. Call side IV started spiking because calls had deflated a lot in the morning, went through the roof. A lot of people would have gone long, probably around here after yesterday's close was broken, and calls continued to spike. They would have definitely got stopped out on this candle. So a lot of trapping happening on either side. Our position is more or less like unconcerned with a lot of this. We are very far away from the action, and currently we're down about 17, 18 points on this triangle. We are down, and the idea will be we'll hold this triangle, and if IV cools off a little bit towards the end of the day, we should get about 10, 15 points at least. That should cover us for a little bit. We also have a stop loss in mind if we lose another 7, 8 points from here. So effectively this is trading at 92. If this starts trading at 100, then we will consider making a change. Our changes will be made only beyond 14,700 on the upside and 14,400 on the downside. So in this 150 point range, we're not going to make any changes, and that will be the best way to approach this. And if premiums continue to remain high, we will look at taking, of course, not with the 500-point hedge, but we will consider taking some kind of a spread, but that is for later. So yeah, the idea is now don't try to do any adjustment in this almost a random kind of behavior that the market is doing, and hold on to this position, which is well balanced and has decent risk reward at this point of time. Okay, the time is close to 12:30, and yeah, this triangle is worth now about 85 points and continues to decay and will continue to decay as the day goes. So we are just holding that. What we're going to do now is book the profit on our India Bulls position and just close it more or less. And yeah, we can create another iron fly here, this, that, whatnot, but we're making a 7% return. We are just going to take it. So people are asking me how you execute from Sensible. Very simple. You go to Sensible, you add whatever trade you want, you add whatever trade, and you say trade all. It brings you the screen and you can get out of everything. Okay, so India Bulls, we have exited and we have booked a good amount of profit, 7%. Okay, what we'll do with the remainder of the trades is I've gone over this Bank Nifty already. We've sold these calls that'll give us good DK if Bank Nifty holds here and or goes up. So Bank Nifty trade currently it is looking like this. Yeah, so what will happen is towards the end of the month, as we progress towards the expiry, we will be protecting the further loss on our future by um, the calls that we've sold. In case we goes up also, we don't give up any upside till 35,000 more or less. So that is Bank Nifty. What are we going to do with ITC? With ITC, nothing. We're just going to continue to hold. This position has a limited profit and limited loss. So ITC, where are we on ITC? So the idea will be we'll roll forward the call eventually. So right now our call is here and we have to roll it to the next month. So as we approach expiry, we will roll it forward in this space anyway. At least for the next 8 points on the downside, we'll be making the same profit. So we're not going to do too much about ITC. And yeah, Reliance, very simple. We will hold and see any downside we have to on Reliance, and we will just carry forward the same position towards the end of next month in case it's not looking good at the end of next month. Because in my opinion, Reliance downside very limited, no matter what kind of bad news you incorporate into it. And yeah, that's the positional update. Our intraday is okay now starting to decay little by little. The idea is best case scenario, I should have been able to square off these hedges which are here and roll them lower, but I'm not allowed to at this point. If I were to do that, I can't buy this hedge. I'm going to buy 13,000 hedge, but I can't buy it. If I exit the hedge and try to buy it again, it'll cause a margin issue. So just like, okay, whatever, we'll keep the hedge as it is. Okay, so one problem we're facing with every up move is that the call prices are spiking and the puts are really not compensating for it, because there's still a lot of fear on the downside. So once again, we had to square off our calls and move them up by 50 points. It's the same thing wherein the call is going up in price, but the put is not coming down. So this overall is a very annoying situation, and you can't do much about it except for hold on and maybe carry overnight and try to get that weekend decay. So that being the case, we have not a lot of options now but to just stay in the trade and see towards the end if you want to carry or not. I mean, you can see what I mean. The call just keeps spiking and the put is absolutely not coming down. So just call side IV being very annoying. These calls are 450 points away, but they have in about 30-40 points, they've gone up by 10 points. Okay, this IV expansion is now starting to get really, really annoying. We've again moved our calls up to 15,100, and the idea now will be we will almost certainly be carrying home this position. We will carry home a triangle of 14,000 and 15,100. So we might move the put to 14,100 as well, 14,100 or 14,200 depending on what the pricing is looking like at the end of the day. Okay, so far in the up move, the only participant were all the other stocks except Bank Nifty. Now Bank Nifty has started to test the day's high. If Bank Nifty starts contributing, then I don't know what kind of short covering we'll have, because there are a lot of shorts built up. All the data is about shorts, and the whole day we've been moving up. And now we're above 14,700. We've moved our put up to 14,200, and now that has come down quite a bit. And finally, this 15,100 call has stopped expanding. Our plan will be most likely to carry the same position home, but Reliance big up move. Volumes are really not there, but big up move, and now Bank Nifty participating. So very interesting day, kind of tricky. Very tricky because of all the call side IV expansion. But yeah, we're thinking we might have to move our puts up even further. Let's wait and see till where this goes. Bank Nifty has a breakout. Okay, I have now moved up the puts to 14,300, and luckily the puts are now at least losing some value to compensate for the call. So that's working out quite well. Okay, so one good thing that is coming from all of this up move, especially Reliance moving 70 points from its lows today, is that our positional trades are doing extremely well. Our Reliance position, I think, in the morning from a mark to market loss of something like 3.5, 4 lakhs is now in the positive. So that's a good thing. These calls will, of course, bleed, but these are still out of the money by 800 points. And these are covered completely by our future. So we don't have to worry too much on the call side that we've shorted. So Bank Nifty, basically what we did in the morning was to protect us from a further down move. And now in this up move, as long as we're below 34,500, it's a decent position to hold, nothing to do. And yeah, so that's the one saving grace. On our triangle itself, currently there's 100 points in the 14,300, 15,100 triangle, and with about 45 minutes to go. And if we happen to face resistance now, which seems unlikely, then this triangle will decay a little bit. I'm going to be carrying this triangle position overnight anyway, so I'm not too concerned about getting out in case there's a last moment trending move. Okay, the time is 3 o'clock, and now this 800 point triangle is trading for something like 95, and we are currently down 20 points. Our plan will be we will wait for this to start trading at something like 90. If we stop trending in the last moment, it will go down by 5 points in the last half an hour, and then we will exit. We have exit orders. And to carry, we will be creating an iron condor of 14,200 and 15,200, so 1,000 points there, with a hedging at 13,950 and 15,450. So that's the plan for now. We're down something like 20 points, and yeah, in the last moment, if this strangle value starts going over 97, 98, then we'll just hit exit and get out of the intraday positions at least. Okay, so this is what happens in the last moment, especially if the trend starts to break or halt or relax. It's that absolute crash in the call prices. These were trading at 50 like 5 minutes ago. So the calls are crashing, the puts are expanding a little bit, not much. But together they're worth about 84, 85. We'll exit if this expands to 87, 88. So yeah, last moment, complete crash in options. Everyone who went long will start exiting. People who went long puts, people who went long calls. Nobody wants to hold on to that position. And yeah, that's what's leading to this complete crash in options pricing. So the fact that we're getting this kind of a crash in pricing might make it less attractive to carry, but let's see. For now, this is trading at something like 84, 85. Okay, there's 5 minutes to go till we have to exit our MIS position. What's happening now is RIL is getting sold into slightly, but that is being compensated by Bank Nifty. And yeah, what a day. Start bad, and then data looked horrible, and massive short covering, and a slight dip in the last moment. So that being said, Strangle is now trading at less than 80. It's trading at like 78, and our plan will be, if this goes to 80, 81, we get out. And yeah, in fact, now that we're down only something like 2%, I'm reconsidering, and also because in the last moment prices of options have come down so much, it's unlikely that I will be carrying anything. I'll just enjoy my weekend instead. So yeah, that more or less looks like it. I mean, net, I think the day has been quite good for us. The RIL up move, as I think we were at a negative mark to market of 5 lakhs here, and now we're actually positive. And what is bleeding for us, these calls it's not too much of a problem that these calls are bleeding, because these are protecting our downside, and this is still very much out of the money by 1,000 points, and this is fully hedged by our future. So yeah, now 78 points in this triangle. Will keep you posted. Probably square off in another 3 minutes. Okay, this triangle is now trading at something like 76, 77, and we're going to start cutting our position now. There will be slippage, and we can't do anything about that. Okay, it's actually bought these options. Okay, now Zerodha will square us off for the rest of the options. So more or less at the end of the day, we closed down on our initial sizing less than 10 points. It was a kind of frustrating day, constantly trending upwards. And yeah, trending upwards is not a problem generally. But what ended up happening is because of the IV that kept going up along with, especially on the call side, we found it a little difficult to manage. And yeah, that gets us out of everything. We closed the day negative 238, and that's fine. It happens. And okay, did not carry anything for the day. Overall, for the day, we're down about 2.38, and yeah, that's more or less the summary for the day. Did not want to carry anything because the pricing was not great, and yeah, we don't want to take something unless it's very lucrative. The premiums were really good in the afternoon, and that's why we had our position open. Towards the end, the premiums really cooled off, making it less attractive to carry. But that being said, from our lows, we recovered almost about 20 points, and that's a good enough outcome for the day. I wish you a great weekend. Have a nice time. I'll catch you next on Monday. Have a great evening.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.